Yeah.
And then the financial system, I've always said, and I've been saying for a decade, we can front run the institutions. And we had basically 10 years to front run them. Now
Yeah.
they're coming.
They
Regulations
are indeed.
change,
Yeah.
they're coming, and they're coming in the financial sector first. So stable coins, it's a way of the US broadening its reach of the dollar, but it's also a way of financing the debt, which is a huge problem. It still remains the biggest economic problem to date.
Raoul Pal emphasizes the importance of blockchain technology in transforming the financial system in meaningful ways. It promises to achieve three goals: building trust without the need for middlemen, changing global money flows, and fostering transparency across transactions. These changes are more than just hypothetical. Instead, they affect the financial interactions between people, organizations, and governments.
Crypto journey, where I realized that was the answer. I then also, as part of that whole period, people would come up to me and said, "Why didn't we know what was going on?" You know, friends of my parents, friends of friends, everyone lost money. Half my friends in Spain went bankrupt. And I'm like, yeah, we're not doing a good job of really democratizing the information that's held within the hands of a few. So we started Real Vision, which was the world's first kind of long form media platform. That's how we started, without a full kind of platform for investors in a number of different ways. So that's been that journey. Also, I've got an asset management firm called Exponential Age Asset Management that invests in crypto hedge funds to try and capture the trend of what we're at $4 trillion market cap today in crypto. I think it goes 100 trillion. So that's a way of capturing that mega trend. And in addition to that, I'm also on the board of the SUI Foundation, which is an inverse model to anything we've seen before. So retail drove the thing from start, which was fascinating.
Yeah.
And then the financial system, I've always said, and I've been saying for a decade, we can front run the institutions. And we had basically 10 years to front run them. Now they're coming. Regulations change, they're coming, and they're coming in the financial sector first. So stable coins, it's a way of the US broadening its reach of the dollar, but it's also a way of financing the debt, which is a huge problem. It still remains the biggest economic problem to date. And then on top of it, blockchain rails are just more efficient for settlement, instantaneous ownership. This decentralized ledger is extremely useful for the financial system. Things like NFTs work really well for things like derivatives, because those are just contracts and we can turn them into smart contracts. So that's the financial system. And that is now igniting and starting its journey. So the next 5-10 years will be all of that moving to blockchain rails. But there's vast parts of the economic engine that is based on the internet, that really the blockchain, if you think of the blockchain as a different way of organizing the internet itself. So there's value that gets transacted. There are contracts from everything from tickets to whatever it may be that exist that are more efficient on blockchain rails. You create a world where not only do you read and write, which is the internet, but you own it as well. So you own your own data, and you have the transparency of what blockchain does. So that is what I think the market is not focusing on. They're talking about tokenizing real world assets like houses and whatever. Great. The reality is digital ID is probably the biggest use case of all outside of money. In an AI world, we've got massive applications to come out of a number of different areas, and one of them is the area you're working on as well. Just anything that gets transferred on the internet can be done in this way. The model for me is broken on many, many levels. One, it's purely extractive of our attention. And yes, in exchange, we get free services. Okay. But the power with which that attention is concentrated in the hands of a few corporations is simply staggering. You know, how much information Google has on us all is beyond anybody's comprehension. People, are fighting like governments that we shouldn't give them our information. I'm like, you have no idea. My Google Nest knows which room I'm in at any stage, when I'm on holiday, what time I sleep. Your Roomba tells you exactly the dimensions of your house. I mean, it is unbelievable how much information they have, and how they monetize that is through advertising. I'm still actually not sure about the listening thing, because I noticed things that, we all notice it. So there's something going on, and generally you don't mind, but we're going to move into a world where AI is going to capture a lot of the value chain of human work.
Yeah.
So where is our role in this?
Mm-hmm.
We need to get paid for our attention. And so my view is that somewhere between your digital ID and what happens with advertising, that you have to share the revenue directly with the people. Now, YouTube do it a little bit if you've got your own YouTube channel. Twitter does it if you're, if you're a super node on the network and you're garnering attention. But there are many other ways of which we can earn a living ourselves for our attention. That's kind of interesting. I know we saw it with Brave Browser with the basic attention token.
Yeah.
Interesting start. So that's one part of the advertising industry. Well, we'll talk about that part and the success rate that is low.
Mm. Yeah.
So what you've got, so conversion rate is very low from an online ad.
Yeah. Mm-hmm.
Now, if you have high quality information about me and you serve me ads directly, of which are valuable to me, your conversion rate is going to go through the roof. So in which case you're going to pay more for that because it's higher quality lead, but you'll probably still save money as a brand because you're better targeting. And so therefore, will I be sharing a fraction of $5 or being share a fraction of $1,000? I don't know.
Yeah.
But if you think about how much time we spent online in a year, does that add up to a few $1,000s? Or if you're an intense user of the internet, could you make $10,000 a year? Great. It's not a living, but it's a way. It's kind of like if you think about adding solar back to the grid. You're participating in a network of which you get economic value, which is they buy the excess energy from you.
Yeah.
Right. That's how I think about it. I don't think of it as like, oh, the advertisers are going to make us rich. No, it's not going to happen.
Yeah, we quit.
Yeah, baseline income or cash flow. Okay, that's interesting because we are, in the end, I think we're moving towards more network states, and therefore nodes in the network who add value need to get economic incentivization, and that can be via tokens, which I think is the organizing principle for larger networks. I think that works well.
Yeah.
Since its last peak of 124,500 yen, the price of Bitcoin has recently fallen to about 115,500 yen, a correction of 7 to 8%. Short-term holders who transferred more than 20,000 BTC to exchanges at a loss in 3 days accounted for the majority of the selling. This abrupt rise in the realization of losses, according to data gathered from the blockchain, is frequently a sign of either more substantial corrections or a reset that gets rid of weak candles. Analysts are split. Others cautioned that a closing below $144,700 might speed a push towards $110,000, while others believe the support zone of $100,000 to $110,000, which has been steady for more than 100 days, will hold. Prediction markets, which are putting Bitcoin closer to $14,000 by the end of the week, are echoing these cautions.
For a second, if you go to an advertiser who goes to X, right, there's probably now, I don't know the numbers and nobody will admit it, but let's assume it's like 30%, 40% agents now.
Yeah.
Or bots in one way, shape, or form.
I would say so. Yeah.
Then you're, as an advertiser, your CPMs just keep diminishing, and we've seen that over time because the quality of who you're advertising to keeps diminishing. We saw the same with a huge rise of let's say India on the internet. So you might target a person on the internet, but if they're from India, actually their propensity to spend because of the average income is lower, but they're probably going to be in the next few years the largest English speaking part of the internet.
Yeah.
So it becomes an issue for brands. And having gone through this myself, the other thing that happens, when we get into the murky world of advertising, is you get click farmed to death.
Yeah.
And brands get abused. I mean, that's a real issue. So I'm not looking at it from, hey, brands are abusing us as people. I'm thinking everybody's getting abused in this system, and a more direct peer-to-peer way of doing it actually solves a lot of problems.
Despite the volatility in the short term, a number of analysts continue to upbeat. Bitcoin, according to Bitcoin, will not fall below $100,000 during this cycle. The company forecasts that Bitcoin will reach $145,000, a potential price of $250,000. He considers dips, such as the most recent one, which closed a gap in futurists that had been open for a long time to natural resets in a bullish structure. Trader Roman and other skeptics warned that, if the market fails to recover near $112,000, it might open the door to a decline towards $197,000. The next phase of the market, as contingent upon whether buyers regain momentum or whether weak demand, Providence bears more opportunity to maneuver. This is because the market has already absorbed $333 million in liquidations and trading volumes have been scrutinized.